$250 billion for a company he already controls?
I read the filing 3 times looking for a typo. It is officially the world's most expensive left pocket to right pocket transfer.
Oh, come on. It is a brilliant consolidation play. SpaceX needs the compute infrastructure, xAI needs the capital.
I am just staring at a $250 billion price tag for a startup. But fine. Let's unpack exactly how Sullivan and Cromwell papered this absolute fever dream of a mega deal. The rundown.
$2 trillion. That is how much undeployed private equity capital is just burning a hole in people's pockets right now.
And they are finally spending it. Acquirers are completely done waiting for the perfect macro environment. They are just pulling the trigger.
Which explains why my phone has not stopped buzzing. We have a heavy rundown today.
I want to start with the footnotes on this Klarna deal. Värde Partners just led a $1.7 billion significant risk transfer transaction with them.
Buy now, pay later, transfer the risk immediately.
Exactly. It is a massive SRT. Klarna gets capital relief. Värde gets the yield. The structure is actually gorgeous if you read the filing. They are offloading the exact tranches of consumer credit that make regulators nervous.
You and your gorgeous filings. But it makes sense. The credit environment is shifting. Speaking of shifting, Danaher is officially moving forward with the Massimo Corporation buyout. $9.9 billion.
I hate this price. I really do.
Oh, come on. It is classic Danaher. They buy premium medical tech, they plug it into their operating system, they print cash.
$9.9 billion for Massimo right now is a massive overpay. Look at the consumer health spin-off drama they just went through. Massimo is messy. Danaher is buying a headache.
They are buying a premium brand at a discount to its historical peak. The banker in me respects the timing. They swooped in while the board was distracted.
The journalist in me thinks the bankers just wanted their advisory fees.
Fair enough. Quick hits on the rest of the board. Antin Infrastructure is buying Sapphire Gas Solutions from Apollo funds.
And Lupin finalized the VISUfarma acquisition in Europe. Classic ophthalmology roll-up. Very clean.
But the real noise is in the Whisper network. Uber is reportedly circling Blacklane.
Wait, really? The chauffeur service?
Yep, Uber wants to put you in a black Mercedes with a driver wearing a little hat. Aggressive luxury expansion.
That is hilarious. From dodging surge pricing in a dented Prius to actual chauffeurs. Does the math even work on that?
Probably not, but I will absolutely expense it. Also, hearing Estee Lauder and Puig are deep in talks for a massive merger. Mostly stock?
Mostly stock means nobody wants to part with cash right now, even with the $2 trillion in dry powder sitting around.
They need to save the cash for the AI arms race, which, by the way, just drove global deal values past the 1.2 trillion mark in Q1.
And a massive chunk of that is from the craziest mega deal we have seen in years. $250 billion.
SpaceX and xAI. I need a drink for this one. The big one. $250 billion. I keep saying the number out loud just to see if it starts sounding normal. It doesn't.
It shouldn't. It is $250 billion for an AI company that barely existed 3 years ago.
But this is the ultimate Elon move, SpaceX buying xAI. He is literally stacking his chips on the table.
He is moving chips from his left pocket to his right pocket, Nate. Let's be real about what this actually is.
Oh, come on. It is way more than just a pocket transfer. This is the ultimate vertical integration play. SpaceX needs massive real-time compute for Starshield and Mars logistics. xAI needs orbital infrastructure and captive revenue. It is a perfect marriage.
A marriage where the bride and the groom are the exact same person. I pulled the preliminary disclosures this morning. The corporate governance gymnastics required here are absolutely wild. You have these independent special committees on both sides trying to pretend they are doing arm's-length price discovery.
And Sullivan and Cromwell is laughing all the way to the bank. They are leading the global advisory rankings right now, and you know the billing hours on this internal negotiation are legendary.
Elon, negotiating with Elon. I would honestly pay a premium just to read those board minutes, but the valuation is what actually breaks my brain. $250 billion. How much of that is real cash versus creative equity swaps?
Does it even matter? It just pushed global M and A values past the 1.2 trillion mark for Q1. Acquirers are completely done waiting for the perfect macroeconomic weather.
Right, but this single transaction is severely warping the entire quarter's data. If you look at actual completed deal values, we are at a 5-year high of $438 billion. SpaceX is skewing the reality of the broader market.
Warping the data or defining the era? Look, I used to build these pitch decks. If you tried to pitch a $250 billion related party AI space merger 5 years ago, the managing director would have security escort you out of the building.
I still think you should get escorted out. The synergies they are claiming are entirely theoretical. You are paying a massive historic premium for AI capabilities that are still fundamentally unproven at this specific scale.
Unproven, Maya, whoever controls the compute controls the future. It is a digital arms race. SpaceX is building an orbital moat that no sovereign nation can even cross, let alone Blue Origin.
I need to see the actual revenue projections. Right now, the press release reads like a really expensive sci-fi novel. They are burying the risk profile under buzzwords.
Sometimes the sci-fi novel becomes the market reality, and right now, it is the tide lifting all boats. Even the private equity guys are waking up. You have $2 trillion in undeployed PE capital finally starting to move.
Which brings us perfectly to the credit markets. Because speaking of massive numbers that require a close reading of the footnotes, Värde Partners just pulled off a massive synthetic risk transfer with Klarna.
$1.7 billion of buy now, pay later risk. Grab your magnifying glass, Maya. Voices. So I'm reading this note from a major desk this morning, and they're claiming that the $2 trillion in private equity dry powder is, quote, finally being unleashed. They say buyers are done waiting for perfect macro conditions.
I read that same note, and honestly, I rolled my eyes so hard I saw my optic nerve.
Oh, come on, the volume is definitely up. You can't argue with the Q1 numbers.
The volume is up because of panic buying in tech, Nate, not because PE suddenly decided interest rates don't matter. Look at the actual data. Completed deal values hit a 5-year high of $438 billion.
Exactly. That's a massive quarter.
Right, but look at the composition. The SpaceX acquisition of xAI was $250 billion. That's not a broad PE deployment trend. That's Elon moving money from his left pocket to his right pocket while Sullivan and Cromwell collects the advisory fees.
Hey, fair play to Sullivan and Cromwell. They're crushing the global rankings right now. You can't deny the analysts are right about the broader narrative, though. The race for AI is completely reshaping the landscape. They're tracking global M and A deal values past the 1.2 trillion mark in Q1 alone.
1.2 trillion announced, not completed. I need to see the cash actually clear escrow before I buy the narrative.
Spoken like a true skeptic, but as a former banker, I'll tell you we celebrate at the announcement. The completion is just a legal problem.
And that right there is why I read the footnotes. You guys pop the champagne on a press release while the regulators are already drafting the injunction.
We still get the retainer. But speaking of things that are just whispers and press releases right now, wait until you hear what Uber is circling. Spill the tea. So Uber is sniffing around Blacklane.
I saw that, and honestly, I hate it.
You hate everything. But think about the margins on luxury rides.
They already have Uber Black. Why buy a chauffeur service just to put a different app sticker on a Mercedes?
Because Blacklane actually screens their drivers and owns the premium corporate travel market. You really want to pick up a visiting CEO in an Uber Black that smells like a damp golden retriever?
Okay, fair point on the golden retriever. But I still think it is an unnecessary distraction. Uber is just feeling the FOMO because everyone else is doing deals right now.
Well, speaking of deal FOMO, the whisper numbers on Estée Lauder and Puig are getting extremely loud.
Loud and incredibly messy. A massive predominantly stock-based merger between those two. Good luck valuing that paper.
It makes total sense, though. You have Estée Lauder struggling, and Puig has all those prestige niche brands. It is a classic portfolio gap fill.
Have you actually looked at Puig's ownership structure? The family still holds absolute voting control. You genuinely think the Puig family wants to trade their pristine voting shares for Estée Lauder stock right now? Show me the math that makes them say yes.
If the exchange ratio is sweet enough, absolutely. Acquirers are not waiting for perfect conditions anymore. There's over 2 trillion in private equity dry powder just sitting there. Strategic buyers know they have to move now before the PE guys wake up and outbid them.
2 trillion. That number still makes my eyes cross. But fine, I will concede the strategic urgency. Just do not tell me it will be a clean integration. It will be corporate theater at its finest.
Oh, it will be an absolute bloodbath, which is great for us.
Always the banker. Speaking of corporate theater dragging on, we need to look at Gilead's extended tender offer for RCLX tomorrow. Are they ever going to clear these final hurdles? Tomorrow's radar. I am still watching the clock on Gilead's tender offer for RCLX. It expires tomorrow at midnight.
You actually think it closes? I bet they extend again.
The footnotes on the last filing looked clean. They are finally clearing this hurdle.
We will see. I am way more interested in the Uber whispers. Word is they're circling Black Lane.
On the luxury chauffeur service, that makes zero sense. Show me the unit economics.
Oh, come on. It makes perfect sense. They want those high margin corporate accounts. There is 2 trillion in private equity dry powder sitting out there. Strategics like Uber are panicking. They have to buy growth before PE swoops in.
So they just throw cash at luxury rides. Typical.
Better than the Estee Lauder and Puig rumors? A massive stock-based merger right now? Good luck getting those valuations to match up.
Hey, if US Bancorp can push through a $1 billion deal for BTIG, I will believe anything. We should see those regulatory filings drop tomorrow morning.
I will be refreshing the SEC database at 6 a.m. sharp.
You really need a hobby.